Happy Thanksgiving, team. Thank you so much for all your support. I'm not sure if you've noticed, but the channel is actually approaching 1,000 followers, which is incredible. That makes ARCa eligible for the YouTube partnership program. So now they're going to start streaming commercials on my thing, right, upon evaluation. But hopefully this Tesla talk can be a relaxing after dinner or before dinner, depending on your location. But yes, we have a few things to talk about for Tesla. So before we get started, what is up, you guys? This is ARCa coming at you with a TSLA update. Now, please subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. So we are looking at Tesla in the 8-hour chart here, and we have noticed that we have made a breakout. Now, yes, admittedly, I was expecting a 162 to 158 range of support. Before continuing to the upside, I did mention that the 2-spot 618 was an area of interest. Excuse me. And we did bounce from here. Now we have created a gap. There's a few things that we need to cover, that we need to make sure that we're that we're looking at. So we do have a new gap now, and that gap range, just for our information for your notes, is between 170.27 to 172.45. That is now what you can consider a psychological component. And to be perfectly frank with you, this descending or this falling wedge is actually broken out a bit early. And the price action is still, in my eyes, raw price action is looking bullish. First of all, we do have support from the 7-day exponential moving average right here, represented by this yellow moving average. And also the 1-spot 618. It's the inverse 1-spot 618 that we have support from. The inverse Fibonacci ratio was for us to be able to determine how low the asset was able to go from when we were covering it up here. This is how we were able to locate the 2-spot 618 and the 3-spot 618, the range of support. Now, this is the Fibonacci retracement that we have used from the previous day's low to the pre-market high of, let's just actually verify exactly where it is. So we're looking at from this low to just about this low right here. So we're talking a wick basis. Okay, so we have stopped. If you can look at right over here, this green line, this is the price where we're currently sitting at 183.46, and we are right at that resistance range of the 1-spot 618 golden mean. A very important ratio to keep in mind. This is the 30-day exponential moving average. We can see some resistance coming up to that, which has direct confluence with the 2-spot 272 at the $190.10 level. We're gonna move from here. I'm just giving you these metrics because we might need them as we move forward. Okay, so judging by raw price action, I can definitely see us moving up to the 2-spot 618, 193.54. Now, on a closing basis of a candle is what I'm talking about. Now, a wick basis, I can definitely see us moving past this, potentially touching the 3-spot 618 at 203.52 before facing a pullback. Now, the pullback is, I'm saying that because we actually haven't retraced to come and test the newly converted resistance into support from the wedge. So there is that as well. Now, the wedge breakout point, or the gap that we have here, is very much in confluence with that newly converted resistance into support as well. So that's another psychological component that we have to keep in mind. I wouldn't suggest any continuation to the upside unless I'm talking about beyond the $203.52 level, unless we do face a higher term time frame candle closure above this area here, which is 199.11. So as long as we are below this 199-cent level, $199 level, I do see the favor for the bears, the favor to the bears. So we can see some upside still continuing, but there are there are certain things that we have to keep in mind. For example, the gap, the newly converted resistance into support test, the fact that we have now broken out of this wedge a bit prematurely. Usually we tend to break out of triangles like this when they're about 70 to 75% to the apex of the triangle. So we are a little premature within this. Okay, so now let's move on to the next chart and see what we have. So this is a little bit of a broader spectrum. This is the daily chart, and we are looking at what is very similar to the SPY setup. I know this is the 8-hour for SPY, but I just want to be able to show you the pattern in which the SPY is falling in, and is very similar to the Tesla pattern. So it's very much in sympathy to the broader markets, which is understandable. You know, we're in a bear market. So, yes, so within this chart, we were able to locate a couple demand zones, and this was the first of two, and this was the second one right over here. The range that you're seeing here between 159 and 167 is the range that we were looking at here in a smaller term time frame, of course. So we did use the demand zone that we were talking about for a bounce to the top, and it looks like we have cleared the second demand zone and have now converted, or potentially will convert, this area into a form of support before continuing on to the upside. This price action is incredible. This is arguably a daily print of a bullish hammer. It is a smaller one, but it's still a hammer. Usually when we do get this type of hammer candle printed at the end of a downtrend, it usually signals a potential reversal of signal. Now, if you can see here, you can also take a look at the gap visible from the daily perspective as well. So this is that psychological component that we still have. Now, this candle is, since it printed the way it did, usually the second candle after the hammer is the confirmation candle for an upside continuation. In this case, this candle absolutely printed majestically. So it's definitely a bullish statement for Tesla stock. Aside from that, we are also in the process of making our ascent to eventually, this can take weeks though, to make our true breakout attempt on test number 4. The golden rule of 3 is usually something that I speak of very often, and it's very much like Elliott wave theory. But you're looking at 3 tests of the formation's resistance before huge capitulation or accumulation event, and the fourth iteration would be the more likely one to actually break out before us coming back and testing this as a newly converted resistance into then support. Okay, so this is looking very good, and we are also the trend line looks like it was addressed accurately, since we did get that bounce, a massive bounce actually at that. So let's just go ahead and see just how far up Tesla stock is from that bottom bounce. I want to know the percentage so that we can have it in our notes as well. We're looking at so far just over 10% increase, which is great. Okay, so let's go ahead and move on to the next chart. Excuse me, this is the 12-hour RSI. If you recall correctly, on my last video, I paused when I was looking at this RSI, and I said we do have and I didn't actually continue saying what I was going to say. What I was going to say is that we were in the process of building a massive amount of bullish divergences and phantom bullish divergences. So I wanted to be able to close the 12-hour candle first in order for us to validate the bullish divergences, and we have since done that. I didn't want to call it because I would be presenting hopium instead of facts. You know, so I know the hopium aspect in trading is important too, but I tend to, you know, like every pro, I tend to separate emotions from the trade. So I tend to work with only the cash that I got, right? So that we don't use credit so much. Okay, so yeah, so we're looking at let's see, 1, 2, 3 drives of phantom bullish divergence, and we have 1 primary drive of bullish divergence. So they are very much in play now. And aside from that, on the 12-hour chart, it also looks like we were building. This is that same falling wedge that we were looking at on the 8-hour. It is visible from the 12-hour chart as well. Very good stuff. Okay, so now, since we did mention that Tesla is a bit of a sympathy run to the SPY or to the broader markets, we have to keep in consideration the SPY as well. Okay, so the SPY has a bit more room to continue to the upside. Now, why I'm thinking that Tesla, I'm thinking that we may stop here at the highest level I'm looking at is 203.52 at the very best case. And the reason why, well, let's pull up an SMA just to see if we have anything in confluence to that level there. Okay, yeah, so we do have the SMA 50 very much near the 3.618. This can be our primary resistance. And I don't see us closing a candle above the 199 level. The reason why I can say that is because of the SPY. So this would essentially be a bull. We could be prepping a bull trap situation without the closure of a candle, a minimum higher term candle of 8 hours or more above the $199 level. So if we don't close that candle, we can actually see the resistance touch of the SMA 50 and the 3.618 before coming down and failing this support, and then actually making our touch back down to the 158 level, in which we would then make our actual true breakout attempt at about the 75% completion, or as we approach the apex of the triangle. So this could be kind of a bull trap situation right up here. I'm thinking that because the SPY has just about 3% left in its ascent to its resistance of the descending broadening wedge that it's currently in. If you can see right over here, we are now very close to that area. A 3% increase, or even a 2% increase is kind of a big deal for the SPY and the broader markets. So I can see us lifting up to this area, using this as a form of resistance. Also, with following the rule, the golden rule of 3, you're looking at 1, 2, and 3 tests of the resistance. Now, if you remember correctly, I usually speak of the third test being the biggest catalyst for a capitulation event. So we could see. It's hard for me to be able to say this right now. We could see a very low SPY. I don't think this. I think the markets may be overreacting to the quote unquote bullish news that we got from the Fed on the FOMC minutes regarding the CPI and the PPI beat, and the fact that they could be a little more dovish it doesn't mean that they are gonna be. The technicals are suggesting a massive pullback here, and it's not going to happen for a few days, because I do see Tesla could be literally the hint into that, as well as the SPY. So I do see massive upside still for Tesla. We can go all the way up to $203, which is a great long position, but upon a $199 to $204, that could be a good potential put play. But I think honestly tomorrow the session we're going to continue on a green path. If not, we're going to do some sideways action followed by some upside action on Monday. But I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave the links in the description for you to consider joining the ARCa trading community on Discord. Okay, but with that said, I wish you a great Thanksgiving. Please have a good dinner if you haven't already, and I will catch you at the bell mañana for a short session. Please remember, it's going to be the stock market. The markets will close by 1 p.m. Eastern time, 11 a.m. Pacific. Okay, so that's about it. Thanks, guys. I'll catch you at the bell mañana. Adios.